It's great to be with you today. My name's Helen and I'm a consultant in the Knowledge and Learning team at A4S. In today's session, we'll be introducing the concept of natural capital, how our speakers have accounted for it, and the opportunities that natural capital accounting can bring to your organisation. Please note we're recording the webinar for others and it will be made available on the A4S YouTube channel and website next month. There are 3 learning objectives for this webinar. After completing today's event, you'll be able to recognise what natural capital is and how getting an understanding of your natural capital can benefit your organisation. Understand the role that finance professionals can play in natural capital assessments and how they can use their skills to respond to challenges in implementation. And translate the experience and learning of others to your work, drawing from practical examples shared during the webinar. Please also note that throughout the session, we'll be running a few poll questions which you'll need to complete in order to gain CPE points. The webinar will last around 1 hour. We're going to have a short intro followed by a more detailed introduction to the concept of natural capital from Martine van Weelden from the Capitals Coalition. Following this, we'll head into a discussion with Rebecca Speed from United Utilities and Elizabeth Rubin and Conny LeMieux from Pure Storage about their practical insights and experience. There will be some time for Q&A at the end, so please do drop your questions into the chat function and we'll do our best to answer them. So just as a brief introduction, natural capital can be defined as the stock of renewable and non-renewable natural resources, for example, plants, animals, air, water, soils, and minerals, that combine to yield a flow of benefits to people. Whilst the concept of natural capital isn't new, fewer organisations are currently applying natural capital accounting than adopting the recommendations of the Task Force on Nature-Related Financial Disclosures, or TNFD. But the 2 approaches can work alongside and support each other. Performing a natural capital assessment can help businesses to meet the requirements of TNFD, enhancing the credibility and transparency of their nature-related disclosures. An understanding of natural capital can help organisations to identify the value of their impacts and dependencies on nature and can support a shift to a more integrated and informed decision-making that builds long-term resilience. So I'm now going to introduce our guests for today's webinar, Martine, Rebecca, Elizabeth and Conny. So Martine is a director at the Capitals Coalition, responsible for the successful application of capitals thinking in the business sector through the delivery of several EU-funded projects. She has 20 years of experience in the field of sustainability, ecosystem services, natural capital and anthropology. Prior to her appointment at the Capitals Coalition, Martine worked for the Ecosystem Services Partnership. She chairs the ESP Sectoral Working Group, ES in Business. Rebecca is a Natural Capital Implementation Manager at United Utilities. Rebecca has driven the development of the TNFD approach for the organisation and was involved in the publication of its first corporate natural capital account. Rebecca leads on embedding natural capital into decision-making, ensuring the impacts and dependencies are effectively accounted for. Elizabeth is a Senior Director and ESG Controller at Pure Storage and is responsible for driving the sustainable business strategy, reporting, investor engagement and controllership. Elizabeth has been at the forefront of piloting the 4th impact accounting methodology, aimed at measuring and monetizing environmental impacts. Elizabeth brings over 25 years' experience in corporate finance and strategy within the technology industry, including 5 years focusing on sustainable finance and ESG controllership. Conny is currently Vice President of Internal Audit at Pure Storage. Prior to Pure, Conny gained over 20 years' experience in internal audit, leading teams at Dropbox, Symantec and SanDisk. Conny was part of the 2023-24 A4S Academy cohort, where her implementation plan focused on creating the first natural capital statement of operations, focusing on environmental impact. And Conny worked very closely with Elizabeth to deliver that project. So a very warm welcome to you all. Without further ado, I'm going to hand over to Martine, who'll provide an overview of the capitals approach and natural capital accounting. So over to you, Martine.
Thank you, Helen. Good afternoon, good morning, good evening to you all. I'd like to share my screen. Great, so let me start. So today I'd like to speak to you about how we can account for what matters, and I'd really like to extend my gratitude to Helen and the A4S team for inviting me to provide these introductory remarks. And I'd like us to kick off with this question about what we care about. Here you see several pictures about love within a family, community, clearing at the ocean, job security. I'm sure you deeply care about these things, but are really these things the things you include in your accounts? That's the question. Obviously, the global economy is undergoing a rapid transformation, and we need to consider how to actually account for what we value. And that's what this presentation will be about. And the challenge that we're currently facing is that we are failing to address the global challenges of nature loss, climate change, and rising inequality because our economic system fails to recognize these things that we value, their dependence on nature, people, and society. And conventional measurements of economic success do not give all the information needed to thrive in today's complex world. Too often, we deplete one form of capital and treat the financial gains as profits, creating a net loss of value for society and nature. And as you might be aware, maybe not looking at the poll, not many of you seem to have considered natural capital and nature already. Nature loss really generates a business risk and undermines value chain resilience. So here are a couple of examples. On the left top corner, you see a study that looked at a business as usual scenario in case and showed that 57% of Brazil's yields might decrease due to soil degradation by 2050. And for instance, the UK financial system is for 56% financially exposed and dependent on ecosystem services. So there's a big risk involved if we're not taking care and not taking nature into our accounts. To the left here, you see a graph that you might also know of the Dasgupta review in 2021. As you can see, the yellow graph, it's our produced capital, and it has increased significantly over the past 30 years, whereas our natural capital has deteriorated. And again, it's already now that depreciation of nature is materializing. So to the right, you see flooding at an aluminium supplier hit a car manufacturer's profit margins and revenues in July 2024 and reduced its economic value projections from 15 to 12%. I'm not taking all the examples here because I have limited time, but I'm sure these slides will be shared with you so you can scroll through. So really, there is a rising cost of inaction. What can we do about this? Well, at the Capitals Coalition, we think that capitals thinking can be part of the solution. Capitals thinking is a systemic approach to valuing nature and people. For those who are not familiar with the work of the Capitals Coalition, we are a global organization that supports the way decisions are being made by incorporating the value of nature and people. And we are really have like 460 organizations at our core. We have several capital hubs. These are national hubs and very many technical partnerships and a global, largely growing network that supports us to obtain our mission. So how do we define capitals? Part of the solution to the issues we're facing. Capitals refers to any resource or asset that stores or provides value to people. If we invest in the capitals, they create value, and if we degrade them, we erode their value for current and future generations. Helen already provided the definition of natural capital. So social capital, the coalition, we refer to these 4 categories of capital generally. Natural, social, human, and produced capital. And social capital is the networks together with shared norms, values, and understanding that facilitate cooperation within and among groups. I usually refer to that as the glue. Then we have the human capital, the knowledge, skills, competencies, and attributes embodied in individuals. And lastly, the produced capital that you might also know as financial capital. Sometimes some organizations make a distinction between those. We don't. So the history, the Capitals Coalition started off back in 2012 from TEEP, the Economics of Ecosystems and Biodiversity for Business Coalition. And in 2016, we became the Natural Capital Coalition and published the Natural Capital Protocol, which is basically the first assessment tool to look into natural capital. And also the Social and Human Capital Protocol was launched. And we actually saw that many of these issues regarding natural and social and human capital are integrated and need to be looked at in an integrated way. So that's why the Capitals Coalition was launched in 2020. And now we're working on this integrated capitals framework to look at all the capitals. And really, as much as the capitals are interconnected, but also the system that we operate in is very much interconnected. So this is what we call our transformation loop. And here you see that business, finance, and governance all need to take their part in ensuring that we transform the system. And we have this ACT-D framework: assess, commit, transform, and disclose. Each stakeholder needs to take these steps to transform the system. And I'll show you there, these are a lot of clicks that are coming up, where a lot of organizations sit across this loop. So for instance, we at the coalition, we generally focus at the assessment and the standardizing value. Then for the Science-Based Target Network, for instance, is setting commitments. There are many organizations that support the transformation and disclosure. I guess I'm assuming a lot of you are working on that bucket, the disclosure bucket. Then there's the World Benchmarking Alliance, for instance, focusing more on finance, ensuring financial commitments, supporting allocation. There are organizations that look into the disclosure of financial risks. Then there's the Systems of Environmental and Economic Accounting, SEA, to support national level accounting on natural capital. There are global goals such as the Sustainable Development Goals. And lastly, there are international agreements that change the rules, set incentives that then go back into the loop and support the assessment. And we at the coalition see several international trends, of which these three are probably the most important for you. We see that there really is a growing recognition that the economic system needs to be updated. We also see that further regulation is coming. For instance, in Europe, lots of people are currently busy with the CSRD. And also we see that confidence is key. It became really dark here, so I hope you can still see me, not just hear me. And the last thing I wanted to present is the BETA framework for integrated decision-making that we have just released for consultation, actually. The BETA framework consists of 3 integrated documents: the Capitals Protocol, the BETA framework for integrated decision-making, and the governance for evaluation. And I think it's relevant for you because this is really a novel approach. So I'll dive into these documents a little bit more. The protocol's key innovations are that it really addresses the systems thinking, so how to value the 4 capitals in an integrated way, with natural capital being the bottom and really the other capitals depending on natural capital. And also it really acknowledges the views and roles of various stakeholders. And the capitals approach that is used consists of 3 steps. So it really contains impacts, but also dependencies, because we don't always consider dependencies. So a capitals approach highlights impacts and dependency because a dependency cannot be ignored. We move beyond measurement from outputs to valuation impact, and really to be able to assess the value created and or eroded for business and for society. And lastly, we want to move from silos to systems. So really to ensure integrated decision-making makes visible trade-offs, shared risks, and opportunities to allocate capital, basically. The framework consists of 3 stages in blue. We used to have 4 stages, but now we look into how to assemble information, how to assess this information, and how to act upon that information. And then there are supporting steps for each of the stages to guide you in terms of what to look at and what to assess and how to do that. And very importantly, something that is new to the Better framework is the governance for valuation. And it introduces a common structure to build confidence in valuation. And it consists of value notes, confidence criteria, and transparency requirements. If you're interested in this work, I really encourage you to take up your phone, use this QR code, because you'll be able to access these documents. They will also be shared maybe through the chat or later. And also, I've been asked to share some relevant resources with you. So if you want to get started with like capitals and are not sure where to start, I really encourage you to look at the Encore screening tool, because that's a really good tool to get you started and to make you understand where your key impacts and dependencies are and what is material to your business. The task force on nature-related financial disclosures might be relevant to your work. There's a natural capital accounting for organization specification in the BSI standards publication. And if you want to learn more about biodiversity, there's also the Align project that the coalition is involved in, which you can access through our website. So with that, I hope I've set the scene for the conversation moving forward and that I've been within my time limit. And I wish you a very good rest of this webinar, and please feel free to reach out if you have any further questions. Thank you.
Great, thank you so much, Martine. It's really great to get that kind of foundation for the webinar. We're going to be sharing a few links into the chat, so please do look at those for additional resources. So I'm now going to hand over to Jenny, who's going to host the panel discussion. So Jenny, over to you.
Great. Hi, everyone. My name is Jenny, and I'm a senior manager in the knowledge and technical team at A4S. We're now going to hear from Rebecca from United Utilities, who will be providing some practical insights into United Utilities' approach to natural capital accounting. Welcome, Rebecca. So, United Utilities published its corporate natural capital accounts earlier this year.
Thank you. Good to be here.
Could you please explain why you decided to account for natural capital and how did you approach that work?
Yeah, so United Utilities owns and manages 56,000 hectares of land across the northwest. And the nature of water and wastewater service providers means that we depend on the land to operate. This is to source clean water ready to be treated or supplied to customers, or to receive clean water back to the environment. Natural capital accounting was first considered at UU actually in 2018. So when we completed our first corporate natural account, this baseline wasn't produced externally, it was used internal use only to help with our decisions when building our business plan. We wanted to understand the wider benefits of the land we own beyond our basic service needs, to better inform the investment programme. So we asked our customers what ecosystem services they value the most, and developed an incentive mechanism to allow us to prioritise nature-based solutions. When asked, our customers most valued water quality, climate regulation, biodiversity and ecology, flooding, recreation and health. And so these services were valued when we were looking to complete nature-based solutions in place of hard engineered solutions. An example of this is building integrated wetland treatment works instead of a large concrete tank for storage in storm conditions.
Yeah, that's great to hear about some of the drivers. Thank you. And how, if at all, does the work that you've done so far on natural capital accounting feed into your TNFD reporting?
I would say it definitely feeds into the TNFD reporting. It's been quite a big part of it. So nature is, it's very complex and it can be difficult to understand in a business context. Natural capital accounting helps us identify our dependencies on our natural resources, as well as the impacts our operations have on the environment. So putting a monetary value on the nature can better assess nature-related risks and opportunities and inform our decision-making processes, helping to move towards nature positive investment decisions. Weighing up the cost of a typical solution and considering the benefits for the environment means we'll start to operate in a more sustainable and environmentally conscious way. This is exactly what the TNFD is trying to do with nature-related reporting. So many companies have never considered their relationship with nature, but through the LEAP process, they're actually discovering that they can have a really big impact on the environment in a positive way. So natural capital accounting also provides the necessary metrics and targets to track their performance against these targets and adjust their approach when they need to.
Yeah, that's great. It's really useful to hear from you how useful that natural capital approach has been to your TNFD work as well. So coming back to the natural capital assessment itself, how did you go about actually designing that natural capital assessment? And were there any frameworks or guidance that you drew on to help you? And related to that, if I might, did you come up against any challenges when you were applying that methodology to your organization? And then how did you address those challenges?
Yeah, so for all our corporate natural capital accounts, we've worked in collaboration with FTech Economics, who've been very invaluable with their expertise. And we, in our final account, it aligned to the British standards for natural capital accounting. I'm pretty sure it's BS 8632, just off the top of my head. So for our recent natural capital account as well, FTech Economics worked with our colleagues internally to upskill our colleagues and enable us to produce that natural capital account internally going forward, with the idea that when the account is finished, FTech will have a final review over it before we decide to publish it externally again. So that was really important to upskill internally, because then we can carry out the natural capital account whenever we want to. We don't need to wait for that external influence. So there's many issues with approaching a natural capital account. Primarily, there's a lack of understanding among many stakeholders, whether it's management or internal or external stakeholders, of what natural capital accounting actually is and what are the benefits. However, I'm seeing more growth and acceptance in this area, especially internally. There's also the usual challenges with data gaps and inconsistencies internally. So relying on our colleagues to gather information around business can be a challenge for everyone. When everyone has their own priorities and their own deadlines, it can be a challenge. To counteract this, we can request information in less busy periods. So our mistake when requesting information during our last account, we requested some information in April, which is it's immediately after the end of the financial year. So our finance department is at their height of their reporting and getting everything in line for themselves. So going forward now, we know to request these data midsummer or the end of the calendar year, when finance might not be as busy as the end of the financial year. So lessons learned, definitely.
Yeah, absolutely. It's great to hear that you're getting more acceptance, and also that learning about the timing of data requests is really useful. So keeping on that theme of data, what was some of the most challenging information or data for you to source or calculate when you were compiling the natural capital balance sheet? Did you use any assumptions or proxies to help you with your impact measurement?
So I think internally after that review, I do think we have quite good information in UU, but I think this is driven not just because of the natural capital account, and it's the nature of the business. So we need to know what information we have on the land that we own to make appropriate decisions. But specifically when looking at the corporate natural capital account, I did have issues with gathering land extent information. So working off our GIS softwares and figuring out what land we own. We know what land we own, but then it's separating that out into different land extents. So for example, what woodland do we own, or grassland, moorland, and splitting it out into the different types of land. So for this, we had some assistance from Jonathan at Countryscape Consultancy to review our asset register methodology and provide some extra GIS training. So me personally, when I was carrying out the data requests for the account, I've never had any experience with GIS before. So that external help with GIS training and actually telling us what information we actually need to get from our system and asking the right questions internally to get the right data, that was definitely important.
Yeah, I can see that'd be really useful to get that external just input and support with complex areas in particular. And now that you've completed your natural capital accounts, how are you actually using that information in your organizational strategy and decision making?
So we use the natural capital account in many ways across the business. We're encouraging nature to be considered more often in decision making. When developing our 5-year business investment plan for 2025 to 2030, we had a requirement to consider the wider environmental outcomes in the optioneering process when looking at the build-up of a project. So natural capital accounting and value-based decision making was part of this process. An example for considering what is the climate regulation impact or impact on local communities for different scenarios when looking at a scheme delivered. So for the past 4 years, we've included nature-related disclosures in our annual report via the TNFD framework. The asset register is a valuable tool for this to see and track against our targets, such as our commitment to tree planting and peatland restoration. I hope to update our corporate account this year and provide a new baseline moving into that new business plan period, 2025 to 2030, and just see how the investment decisions that we've made and to enhance nature has impacted on our corporate account.
That's great to hear about your future plans with it as well, and how widely it's being used in the organisation. Thank you so much for sharing, Rebecca. We're going to post the United Utilities Corporate Natural Capital Report in the chat for anyone who would like to explore further the work that United Utilities have done. We will have some time for Q&A at the end, so do post your questions for our panelists in the chat function. We're now going to move on to a discussion with Elizabeth and Connie for an overview of Pure Storage's work in this area. I'm going to pass over to you, Elizabeth and Connie, for your presentation.
Great. Hello, thank you for having us. We're really looking forward to the conversation today. Hello, Elizabeth Rubin, ESG Controller here at Pure Storage, and Connie, our VP of Internal Audit, is sitting here with me. For those of you who don't know about Pure Storage, we actually provide high-tech data storage for data centers. It was founded in 2009, and it's increasingly a go-to solution for many data center providers for their artificial intelligence installations. Fun fact is our founder actually still sits with our executive staff, and I often see him still bringing his lunch into the break room. So we really are a humble company that believes in efficiency, and we're about 6,000 employees, so we're actually getting quite large. Our product, really quickly before we jump into this, is really a highly efficient solution that's environmentally friendly. So from the beginning, that's what our founder envisioned, was efficiency. And this is requiring less energy, less space, and also offers an extended lifespan versus kind of the existing data storage in the data centers. Sometimes the data centers have almost 70-year-old technology today. So about 80% of these large data centers are living off of 70-year-old technology. And so what we're really looking to do is kind of change it from like this concept of a mainframe to, just like your cell phone, right? And we really want to transform the data storage for data centers. And even just size-wise, our solution compared to like a refrigerator versus a small microwave, if you think about the size of our data storage. So hopefully that kind of gives you a little bit of backdrop for what we're talking about and kind of why we are looking at this as a competitive differentiation, and environmental resources as an element of that. If we kind of get in here and start talking a little bit about the history of how we got started. In 2023, our CEO found me in the hallway. He just got back from Davos, and he was sharing his vision of a cost accounting approach in measuring the environmental externalities of our product and our business. He really saw this as a source of competitive differentiation. They were seeing waste in the data center with this older technology, and that draws upon financial costs as well as environmental costs. We kind of look at it as an analogy to the car. So if you have a car that gets to the finish line first, that's great, but we want to have a car that also contemplates miles per gallon, right? Like, okay, who's getting the highest performance with the best miles per gallon? So that's why we really started thinking about what we really want to do. We also have an evergreen offering that enables our products to call home. So that's what's also cool about our technology, is that our products will actually call home, which allows us to go pull those back, upgrade them, and reuse them, which extends the lifetime by 2x. So we're like, hey, this is a big value. We're reducing e-waste, we're really efficient, and we're really improving the performance per watt of energy used and per square foot used in that data center. So there is this double materiality. There's this financial impact and this environmental benefit. And so that's a lot of where we went here at Pure Storage. And we feel that this transparency is important through impact accounting. And so when we did this, and I can kind of go into more detail, but maybe I'll stop speaking right now. But we really do believe that our financial models need to be modernized to reflect the scarcity in natural resources. So we believe that we can use the processes, tools, and methods that we use today for managing financial capital to do the same for natural capital. And we believe that, today natural capital is effectively zero cost, right? Nobody's measuring it. So what is the cost? Zero. And that we actually need to upgrade our models to make sure that we have this transparency to make the most efficient and optimal decisions. And we are doing this at the product level. So I might go ahead and stop, and maybe if there's some additional questions that you might have in our process.
Great, thank you so much for that introduction to impact accounting. Happy for you to keep on going. But it would be particularly good to hear about how you started your work on developing your natural capital statement of operations. How did you determine which of those environmental impacts to measure and what scope to apply to the environmental impacts?
Well, I think this is a good time to kind of talk a little bit about the process, right? So I was saying that our CEO, when he came to me and said, hey, I want to do this, the good thing is that I had already been doing quite a bit of research or just tracking actually George Seraphim's work at Harvard Business School. And I had done that before I had joined Pure Storage, and I was like, wow, this is such a great concept, and wow, how hard is this really going to be to get started? And so I think the big piece was, number one, following that. And I actually ended up stalking George Seraphim on LinkedIn, trying to get him to say, hey, we want to use this. We want to change the global footprint and the environmental impact of data centers globally. Will you join? Like, how do I learn more about what you're doing? Because we really actually want to deploy that here at our company. And so George responded, and he actually said that, hey, there's a practitioners partnership that they had with the Value Balancing Alliance that's coming out of Europe. And hey, join them. They have a group of almost 30 large multinational companies in Europe that are actually following their pilot. So this is, again, called the Value Balancing Alliance. I can put that into the chat. So instantly started conversations with the Value Balancing Alliance. How do we go join this? And just kind of a fun fact in terms of, first starting tops down, was that, you really have to have that CEO level support, but we also had our founder, our CFO, our chief legal officer, investor relations, like how do we bring them along? So I was at a company event and our CFO invited me to a dinner with these folks, and this conversation started, and it really started very similar with Martine, which is saying, hey, natural capital is a scarce resource, right? We are using less of a scarce resource. This has fundamental value for the company, and it's also the right thing to do to start measuring this. And we wanted to kind of create a sense of competition at the product level to really kind of come to the table with our in a friendly competition with our competition to say, hey, can you have the same performance with the least amount of impact that we do? Let's measure it. Let's really start creating this competition, because we really do believe that that will spur true change, right? It's not philanthropy, it's business, and business does well with competition. And how do you do that? Through transparency in reporting. And that was a fundamental vision. So at that dinner, we got the big check off, and then it was moving forward. And I think getting to your point of saying, hey, once we got that executive buy-off, and then they communicated to their VPs and so forth, like, this is what we're doing, it almost kind of became carte blanche to go get this done. And it was a ton of work, but we first did our materiality assessment across our value chain. So what I'm sharing with you here is to say, hey, when we did our materiality assessment, we looked at this. We had these cross-cutting environmental topics of carbon, product materials, waste, water, land use. These were our big, for our company, what we really wanted to measure. And with the impact accounting framework, there's the gross value add. So we also want to acknowledge that economically, we're giving value back to society through paying taxes, benefits, living wages, fair wages back to society. So it's really saying, hey, of everything that we add back, what are we drawing down in the natural resources to generate our product? And that is the ultimate model that we developed. And so that was the first piece of it, is doing this. We also took a very much a financial approach to this. We wanted to slipstream in. We took it at a cost center level. So think about the GL strings or the general ledger coding. You have your cost center and you have your natural accounts. And so from that same kind of financial system, we were able to assign and drive accountabilities and have a natural capital cost alongside financial costs is really that framework that we got started here. And so I think, so then we do it by location, we do it by cost center, really drives more accountability. So I guess one other thing in terms of data gathering, I'll just kind of get started. Or maybe what I'll do is I'll stop to see if there's any more questions, but I can also kind of get into how does this actually work and give some practical advice of how we ran the calculations, if you would like.
Yeah, it would be great to hear more about how it would work, and also just a little bit more about the measures you took to ensure the quality of data as well within that collection and measurement process.
So how does it work? So as we're collecting the data, I also want to say that our goal really is, and Connie will kind of talk a lot about the work that we did on data quality, because that is essentially a key piece of this model. So how does it actually work is we want to slipstream it into the data we're already collecting today with our voluntary reporting, and also where we're going with regulation. So as you saw on the prior slide, we're already collecting greenhouse gas, we're already collecting water. We already know our land use mostly because of our real estate portfolio and some of our manufacturing side. And we also have the bill of materials for our products. So we're like, okay, we know the materials that we're drawing down. I know where I have steel and how much I use, or copper, or any of these type of materials. We also know our packaging, right? So we're already kind of collecting this information today. And we'll go into how we got comfortable with the uncomfortable. So Connie will talk about that in terms of the data quality and where we kind of looked at that. But ultimately we said, hey, we're already collecting this today. Our goal is to slipstream in. And the big piece that we got from the Value Balancing Alliance, which by the way is now publicly available through the Harvard Business School Foundation that they have, and I can send you the link, are the value factors. How do you monetize this, and why are we monetizing it? is that we can now assign value factors to those big five that I was sharing. And now you've monetized it, what allows you to make trade-offs across all those different, different metrics. So before, how do you trade off between metric tons and gallons of water? Or environmental impact of land versus your materials that you're drawing down? Like, how do you compare these very different metrics to make it decision useful and holistic? And that is actually why when you add the value of dollars to this counting, you can now make that comparison, right? You can now make trade-offs. Do I spend more money on reducing our water consumption, or do I spend that additional dollars to draw down my greenhouse gas impact of my product, right? Where do I get the biggest kind of ROI? So once you create this common language of dollars, you can now speak not only the same common language, but trade off between these factors. So it was as far as measurement. So how do you go get the units to measure, right? So a lot of that we're already doing with voluntary and regulatory preparedness for our environmental side. We plug that in with the IFVI, which is coming out of the Harvard Business School, their database of monetized value factors of that cost to society for those environmental aspects. So you take that, and then you get that impact. So we measure that impact by product, department, and country to help improve our decision usefulness. So in the bottom, I said, 1 metric ton is 236 social cost per metric ton. That's based on the latest update of that database. And so I just use it. I don't create these myself. This is the database, right? This is where we see it. That yes, there's a lot of different numbers for cost of carbon, but hey, this is our line in the sand, and this is what we're signing up to. There's a lot of research behind it, and this is how we move forward. One other thing before I stop speaking to that last question is, hey, what's the output look like? So I've masked some of this data because we're not yet ready to go public with it, but at the end of the day, you can have a single slide like this, and also we have a lot more detailed slides and results that I go through with our leadership, but just as a hit for our senior leaders to say, hey, here's the gross value add that we've provided to society, right? And you can show it as a % of our revenue or as a total dollar. And by the way, here's the negative environmental drawdown that we've had as a company across our value chain when we think about these 5 aspects of material impacts. And you can represent that as a percentage or as a dollar value. And then we get it down to impact per array. So array is how we kind of report our data storage. And you can look at it by these different product families. I have product families, and we allocated our own operations so you can get a fully loaded view. And then we had circularity impact. I was sharing with you the circularity impact of our product, how we can call home. What does that look like? And when we started looking into it, we said, hey, we can get a ton of impact reduction because we obviously are not redoing and remaking products upstream, but also in the use phase. We kind of call it an accounting credit for some of the greenhouse gas, and I think we'll go into that more if we have questions. And then competitive comparison, right? So a lot of these numbers are like, okay, that's great, but what does that mean, right? How does that compare? So we did some competitive comparisons on the avoided impact. And then we also look at an environmental impact per terabyte of data stored, which is one of our metrics, right? To say, okay, what is that kind of miles per gallon that we're getting? And that was really what we wanted to get to, is what is that miles per gallon equivalent? So that's kind of how we went about this. And did our first pilot. We're in our second pilot, and there's so much learnings that we're going through right now and improving on our second pilot. But I might stop there and answer any questions.
Yeah, I can probably touch a couple more things related to data. We actually develop a data quality matrix or based on stars system. So I think, yeah, this is kind of shows the different data. Well, a lot of those actually learning from A4S, right? So, but we kind of leverage what we learn. But really practically, you want to implement that data quality to apply different data, because yes, similar to Rebecca, we have challenge in gathering our data as well, because we don't have consistent data. So there's data gaps, there's a lot of things, but we believe that we want progress over perfection at this time. So we want to start with that. So that's what we do, have the data quality index and have some general principles as we're developing the first statement of capital accounting. Another point I want to probably just touch upon, just as we are collecting, since 5 material topics, we need to collect data for 5 material topics, it really takes a village. The endeavor is truly cross-functional across many, many different teams. So we have our facilities team, data center owners will collect some of the land use as well as water, but also have manufacturing ops, supply chains for our products, our sustainability team, our strategic alliance looking from the customer's standpoint. Also our product liaison, of course, the ESG controllership, Elizabeth represents, VBA, we have a secondee with VBA, and then also internal audit. I'm just like extra plug-in, but I'm kind of leveraging my process knowledge to really plug in, help me to understand it better, and but also help us for our next step, because in addition, as Elizabeth mentioned, we're going to our second round of the impact accounting. And what we're going to do is actually we're going to put in, we put in a lens similar to internal control of financial reporting, which is risk and control. As we're gathering data, what kind of data risk we have, like integrity risk we have, we want to place control there to ensure, to improve the data quality. So I just want to add this couple of, I know we're kind of probably running out of time, so.
No, that's been great. It's been really helpful to get such detailed insights into your approach and your approach to data as well. Thank you both. I'm going to broaden out to a wider Q&A with all of our speakers. First up, I'm going to come to Rebecca and Elizabeth and Connie, just to explore a little bit more about what the role of the finance team has been in your natural capital work and what skills finance have brought that's been particularly useful for the process. Perhaps if I go to Rebecca first.
So maybe not specifically finance teams, but a finance mindset is definitely helpful when looking at natural capital accounting. So the benefit of knowing how your company works across different departments, get them on board with monetizing, with the idea of monetizing nature. Finance likes to look at well, it's basic, but finance likes to look at money to put that value and make it comparable. If we're looking at, like my example earlier, a hard engineered solution, comparing that against a nature-based solution, the money of actually putting the project together might not look the same, but then the benefits go beyond the basic requirements. So looking at that wetland treatment works, you're getting recreation, carbon benefits to the environment. This is far beyond just the financial impact. So understanding how all that links together, having that financial mindset definitely helps putting that together.
That's great to hear. Any thoughts on that as well from Connie and Elizabeth about the role of finance?
Yeah, I'm gonna echo what Rebecca just said, but I think the finance understanding of the business processes is really important and helpful, and also their understanding and knowledge of a cost accounting structure and financial statement principle and structures. As Elizabeth mentioned, we basically mirror impact accounting along with the cost accounting structure, right? We have the 5 material topics, and they are our natural accounts, and then we have the locations as our cost centers, so you can really measure and the different impacts. So I think that is really helpful. It's very natural, I would say, transferable from the financial accounting into impact accounting.
Great, that's really helpful, thank you. And if I come now to Martine, do you have any examples, any good examples of natural capital assessments or natural capital accounting in practice that you could point to? Have there been any useful tips or learnings from those?
I think we just heard 2 really great examples, actually. So
as well as the 2 we just explored.
but perhaps to add, we do have a case study database on our website. If you go to Impact, one can find it, where I led a project on agriculture. So we have like 30 cases that really look into, for instance, soil degradation and lots of other water usage across the globe. So that might be of interest to anybody who is working, but also from the financial sector, the Dutch Central Bank. There are lots of cases, so it's hard to pick. I guess it's depending on the audience. And I just wanted to pick on what Elizabeth just said on the Value Balancing Alliance. I think it's really good to state that lots of organizations like the Value Balancing Alliance and us are collaborating on these things, because often people get confused if we refer to value factors that has, for instance, been developed as part of a value commission that the Value Balancing Alliance also sits in. So we really try to align and ensure that there's coherence across with Harvard as well. And if you look at the governance for valuation that I shared earlier, that's also really a document to look into some of those confidence criteria and how you can build a confidence in your assessment. And generally, I was really happy that you're already working with your financial departments rather than just the sustainability department. I think that's really key to making this a success.
Thank you very much for those thoughts, Martine, and it's that's lots of useful resources to help people get started. If we finish off perhaps then by coming round to all of our speakers, just to see if you have any recommendations or top tips that you would give to finance professionals who are starting that work to integrate natural capital accounting into their organisations. Perhaps if I come to Connie and Elizabeth first.
Yeah, good. Sure, I can give advice. So I think number one, I'm also doing the ESG, regulation readiness. And what I'm finding is just slipstream it in, get started. Progress over perfection is what we're saying. And it was interesting because even our CEO and CFO said this, because you can freeze up like, oh my gosh, this is like, but no, just keep going, take a confidence level, and something is better than nothing. And you already are collecting the data, and you can start adding these value factors in and start thinking about it. And just get started with the system that you already have, slipstream it in. And then it'll be a lot easier as you keep going. And just a lot of times those conversations are catalysts for change, because I think we all want change. We all want this to be included in there. And even though you don't have this, amazing number, the conversations are changing enough in a lot of cases to get your different groups thinking differently about this. And that, has these knock-on effects. So that would be my advice.
Brilliant, thank you. Rebecca, anything to add from your side?
Yeah, so I was going to say something similar. So I think definitely start with an asset register. You can't carry out a corporate account when you don't know what you have. So understand the basics, what do you have, and then start to look at the information and then look at the benefits. What do your individual assets, what benefits do they provide you and wider society as well? So starting off with an asset register gives you a good building block to then start on looking at the values they provide.
That's a great tip, thank you. And finally, Martine, do you have a recommendation or tip to close us out with?
Yeah, I really think that don't let the perfect be the enemy of the good is a good one. Next to that, when we piloted the protocol, we received that setting an objective is really critical. And I would say just start small, just to gain your understanding of the topic. When you do a materiality analysis, maybe just pick a thing that is material to your business and then expand. These protocols and all these documents have been designed to be iterative. So you can always go and continue your progress, but don't make it too big initially and make it bigger as you go along, I would say. And really be clear on your objective and how you want to include it in your business applications.
That's brilliant. Those are all fantastic tips. Thank you very much for sharing those thoughts. I'm going to hand back over to Helen to wrap up.
Thank you. A really interesting discussion and some really fantastic tips for everyone to take forward into their own practice. So today we looked at the concept of natural capital, the importance for business accounting for natural capital, and the role of the finance team. We've shared quite a few resources as we've gone through, but I'm going to put some into the chat as well, some A4S resources and our recently released A4S guide, the business case for nature. So please do look at those documents that are being shared into the chat. I'd love to thank the speakers today for their contributions, and thank you so much for listening. And we had some really interesting insights. Thank you so much again. If you haven't already registered for our next webinar, the next one is on management information and it's taking place on the 25th of February. The register is being shared into the chat, so please do sign up and we look forward to seeing you at the next session. Thank you all.